Let's talk about the idea that that dip on Wednesday was coordinated. We got to talk about it briefly over on your channel. I couldn't stay for very long. I only had 15 minutes over there. So first of all, apologies for coming in and having the dip. But what do you think
No,
about
you're good.
what do you think about dips in general? What is that dip going on, and was it coordinated?
So that Wednesday dip on AMC, oh, that's so sketchy, man. That sketched me out, especially because it dropped 9.5%, just enough that it didn't trigger the short sale rule,
Yeah.
which is really interesting. The only thing that kind of throws me off is that it didn't reflect on the next 2 days price action. So if that was a coordinated attack, I'm wondering why Thursday and Friday we didn't see more of a negative price action. I mean, Thursday was a little red. I mean, we were down a little bit. We went from open around, let's see, 1080, closed 1016, so down a little bit. But why do that at that point? If they were trying to just hammer down enough so they don't trigger that short sale rule, but then they allowed today and yesterday to be, not a big deal. We said that we still ended up green. We closed at over $11. Like, I don't know, man. It's kind of sketchy. I do think it was coordinated though, because that much of a sell-off is not natural. That is not a natural sell-off. You don't just drop. I mean, we were at 1209 when you had that sell-off on AMC on Wednesday, and it was winding up, like just getting ready to test a break over resistance at 1220 mark. And it wound it up all the way up to 1219. I don't know if that's the right word or not. And then just bam, just a crazy like flash crash. Another 951. Not natural. That does not happen. That's not people taking profits. That's not people paper handsing that. That's just not it. There's not that many people, especially over lunch break. That's what's really goofy about it. This happened during lunch break is when we saw almost the most volume on the day. Wild.
Now the fact
I
that
think.
oh sorry,
Go
keep
ahead.
going.
You're good.
Okay. The fact that you said it was it almost got to 10% and got on the SSR list is the sus part, is almost the exact opposite of what people think about GME, where it got down to 10%, down 10% and immediately bumped back up. That was that was the sus part for a lot of people, almost as if that was intentional to bring it onto the SSR list.
I think they both were. And it's interesting to me that GameStop ended up having that flash crash and it did hit that 10%. And AMC didn't. It just barely missed it. So I'm wondering, I mean, it had to have been the same sort of coordination because they both just flash crashed at the exact same time, from $348 down to 172. God, that's disgusting. That's so bad. But why did GameStop do it and AMC didn't? The only thing that I can think of is if you've got different institutional investors that are trying to set that up, but they're just trying to squeeze one at a time. Because why would you trigger that short sale rule on just one but not the other if that was a coordinated attack? You know what I mean? I don't think that was a mistake. I don't think they would have just stopped it at 9.5% and been like, well, screw it. We miscalculated, ran out of dry powder. You know what I mean? It's just kind of goofy to me, Especially because AMC and GameStop aren't really following the same trajectory anymore. They have different fluctuations. They grow different amounts. Sometimes one's going up while the other's going down, but they both flash crash at the same time, which leads me to believe it's the same big wigs that are playing the game. So, oh man, I'd like to hear your thoughts on that. Why you think that one hit the short sale rule and one didn't?
That is, well, first of all, let me get Meatball back here. The Meatball,
I had a
professor.
Italian sub with meatballs in it today. That was good.
An Italian sub. This is a sign. Everybody, hit that Italian subscribe button down there.
I love it. That's cool.
Man. And if you guys haven't yet, this is Trey Trades. He is a genius, big brain AMC godfather of that stonk. So go ahead and give him that big old subscribe. I know he is. You guys are looking at a big giant of YouTube right here, but he's been so kind to me. Go ahead and show him some love. The answer to that question of why did one hit the SSR list and one did not? Well, GME fell from 350 all the way down to 170, right? So that is down 50%. And then did it recover back up? That would have been a 100% recovery, right? It didn't. It only went up back to like 200-ish and change. So that said, that huge of a drop would have been beneficial the day after, but it happened on Wednesday to bring it onto the SSR list. And that meant that the stock could not be shorted on downticks anymore. The fact that somebody did that right there, it was the subject of Pixel's DD of when the stock dropped, a lot of additional call options piled on. However, the causal relationship between the dip and the additional call options is difficult to point to. But at the very least, there is more, right? And there is more for a coordinated reason. A bunch of apes just saw all of these halts and didn't and were diamond cojones and said, you know, this is not going to be forever. I'm going to buy a ton of call options. Like, who has all that money unless it was a coordinated attack? So that is what the current theory is, that this is on purpose, right? Driving it down to 170, shaking off all the paper hands, and making it clear that this is a stock that is resilient. At the very least, it gave some people confidence, and it shook the confidence of a lot of other people, so that in the future, maybe the only people that are confident left in the stock will be able to go to Valhalla together with their diamond hands.
I think that's a good hypothesis, man. I like that. It's interesting that you mentioned shaking the paper hands, because at some extent, not to bash anybody, everybody's got a different financial situation, and I don't want to make anybody feel pressure for stepping out of the game. Like, if it's something that you got to step away from, whether it's for financial reasons, emotional reasons, mental health reasons, that's cool. Like, I get it. It's all good. But at the end of the day, the paper hands thing, which you're talking about, could potentially affect the squeeze. You never know. I mean, at some extent, if you have a squeeze happening and then everybody pulls out because they feel like, well, I'm up 50%, I'm going to take my profits, that could affect the squeeze to some extent. I mean, institutional investors are going to control it way more than the retails, obviously. And when they step out, you're going to notice, because the stock will most likely, take a pull. But retail investors do still hold a pretty fair share of the overall float of both GameStop and AMC. So if they're trying to shake that so that more people hold, I can see it as a possible strategy. That's definitely possible. And it held up really well after that. I mean, it kept on moving on this nice ascending channel, setting higher lows and higher highs every single day. And it had a false break over basically a level of resistance when that flash crash happened at $280. Currently trading at 264, and it had that false breakover, and it's just hugging right beneath that line right now. So it's set up, man. I don't mind that. The only thing that I don't particularly like is that GameStop is so expensive. And what sucks about GameStop being so expensive is you probably won't have as many retail investors that step into it, because it does trade for $280. Imagine that GameStop eventually hits $1,000 or $2,000 or $3,000. There are people out there that won't buy Amazon or Alphabet because they trade for so freaking high, To that extent, it's just going to come down to either A, you continue to hold and the shorts just have to buy back from you whenever you have your sell limit set to, or B, you've got the freaking whale stepping in and pushing I almost pushed my cup over, pushing the freaking ocean into land. A tsunami will happen, Right. But that's what scares me a little bit about GameStop, is it's already so expensive that at some point you're going to run out of dry powder for these retail investors.
And that is one of the the focuses right now, is that there's a money race. Can we stay smooth brained longer than they can stay solvent? Right, that's the question there.